The negativity is certainly building, so you can understand why people are getting a little bit cautious or nervous. What is it, this week alone? What are we, Thursday? Goldman cuts the growth forecast this week. Morgan Stanley downgrades U.S. equities to underweight. Deutsche Bank says expect a significant pullback. Somebody grab their phone before the rally comes back. Bank of America, Savita Subramanian says it might not end now, the rally, but it could end badly eventually. So, okay, I'll ask you this, Josh. Is it time to get negative, or is it time to say this too shall pass?
I think it's time to say I hope they take them down, because market is plus 18% year to date. And I probably don't have as much stock as I want to if this rally is going to continue. It's the only rational mindset, unless tomorrow is the day that you're cashing out your portfolio. So I really don't see a problem with us having some sort of September or October tremors. Like, that happens all the time. I'm rooting for it. It's a better opportunity to buy than higher prices, and nobody should be shocked by that outcome. On average, we're off 10% from highs every 18 months or so. So, like, nobody should fall out of their chair if and when that happens. The thing that causes it, or whatever cause we assign to it after the fact, will probably be something scary, something like the Fed made a mistake or the Mu variant or whatever you want to say. But it's those times that we say this too shall pass. So I think there's always risk every day we wake up. I know that might not be the most satisfying answer, but strategists have been putting out notes about the potential for a correction every month of every year of every decade forever.
More recently,
and that should not dissuade people from being invested.
Doc, I mean, part of the issue, too, that we raised at the very top of the show with the question we asked, is momentum enough to overcome all of these issues? And you've had a strong year for stocks. It's rare to have, strength throughout 3/4 of the year, and then all of a sudden it falls apart at the end without some existential thing that happens that no one saw coming. I mean, we kind of all know where we're at right now, right? What are the chances of that? Is that in and of itself enough, the momentum, to overcome seasonality and the Fed and Delta and all this other stuff that we're seemingly worried about day by day?
It is, Scott, but, and that's the big part here, that the momentum isn't just all on one side. It's not just all bullish. I mean, Ellen Zentner cut her outlook for GDP from 6.5 to 2.9. That is a dramatic drop, and she's not the only one out there doing that, Scott. So if you've got GDP forecasts being cut fairly dramatically like that, those are the things that I worry about. Now, we had a very good report this morning. I think it was 310,000, which is the lowest since last March of last year, 2020, as far as the filings and so forth today. That's good. And we need a good jobs report. Hopefully the September jobs report that we'll get that first week in October will be that, Scott. We basically got what you and I spoke of yesterday as far as the ECB, more or less standing pat. They did say that they are ready to start cutting back on the PEP, which is their pandemic relief plan, if you will, but they haven't said that they are doing it. So basically they're in the same spot they were. They didn't really goose the market or cause it to drop because of that statement. So I think we do have mixed momentum, though, not solid, just straight line up momentum right now.